Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And for this edition of Trade Talks, we are talking about blockchain, cryptocurrency, and holiday 2017 shopping. Everyone's favorite topic of conversation, of course, is cryptocurrency. And helping me today is Andre De Castro. He is the founder and CEO of Blockchain of Things. Irv Rosenzweig is the president of RZ Wealth. Thank you both for joining us at MarketSite. Andre, I'm going to kick it off with you. It's new to a lot of people in the audience. What is blockchain? How does it relate to the Internet of Things? What does it do?
Great. So blockchain is the underpinning and underlying technology for Bitcoin and many other cryptocurrencies. It's a shared record book of sorts. What makes it very, very unique is that we're not all sharing one record book. It's globally replicated to tens of thousands of computers throughout the world. So there's no one central authority. So now we can transact amongst each other directly without relying on a central authority. And that makes it very unique.
Right, so what are the different ways you could use it then? Like security, for example, what are some of the other ways that it can be used?
So blockchain technology through Bitcoin has been around for over 9 years, and it's proven itself to be one of the most secure infrastructures in the world. Of course, today it protects $160 billion of people's money, and that in itself is proof, and it exists on every corner of the planet. So using this security infrastructure for such things as decentralized communications, for industry, track and trace for supply chain and record keeping is a new trend and fad that's happening with industries as they realize that the technology is not only for transacting the cryptocurrency itself, but as a control ledger of trust throughout the world. So many companies are starting to take advantage of this structure, but there are challenges to doing so. So companies like my own create rapid integration layers to allow corporations to take advantage of this global infrastructure and make it easy to build applications on top of it.
All right, well, let me ask you this. The hot topic right now outside of crypto, of course, is holiday 2017. Can I take cryptocurrency and go shopping? How does that work?
Yes, you can. There are many ways to do so. One way is that there are retailers, a lot of online retailers and a lot of brick and mortar shops that accept cryptocurrency directly. Mainly Bitcoin when we talk about cryptocurrency, which is what we would call the father of all cryptocurrencies.
Right.
However, to make it easier for a lot of consumers, a lot of the major exchanges also allow you to get debit cards, if you will. They're credit cards that once swiped at a retailer will deduct the cryptocurrency from your account. So that exists. There are many competing ones. I'm not going to endorse any one given one. So you can invest in cryptocurrency and easily access your money for shopping during the holidays or when you're in need. So it's very versatile these days.
Well, Irv, let me ask you a question. I'm sure you get this all the time. How can investors participate in this technology?
Speaking with Andre, I think there's a lot of avenues that you can participate in. I mean, the biggest problem right now is that we're on the front end. It's 9 years old, but we're still on the front end of it. A lot of the companies that are participating right now or leading the charge, so to speak, are the smaller companies. And as with many investments, people that get into the smaller companies, mostly on the venture capital side, people with the money, accredited investors, things of that nature. There are other areas that you can look at relative to this because again, the whole dynamic of generating crypto and blockchain, there's a lot of members within the context of the food chain, whether it be hardware, whether it be software, whether it be energy. So I think what we're looking to see, there is a futures fund that's being created through the CBOE. In addition to that, I know that there's some talk about exchange traded funds that are being created as well. And I think the only way probably for the average investor to get into this is in some sort of a diversified manner and in a way that allows them to get into the hardware side, the software side, and possibly the cryptocurrency side as well as a piece of that. It's not quite here yet, but we are seeing that coming any day.
So you have to explain what the difference is between blockchain and Bitcoin to investors, because there are a number of ways to invest in the technology, I guess like a commodity versus the technology itself.
Yeah, and I think that's a challenge. I mean, it's even my challenge to a degree because again, as Andre explained to me, that really Bitcoin is, can you explain again, 100 million Satoshis? effectively. So again, when you look at the actual currency of Bitcoin, it's Satoshi, so-called creator of Bitcoin. And to get a sense of what that represents, one Satoshi is 1/100th million of a Bitcoin. So it gives you, there's an even larger dynamic and even more confusion. But again, Bitcoin would be possibly either the security side of it, possibly a commodity side of it. It's undefined right now. The regulators are trying to get a piece of it in some degree, but right now it's somewhat undefined. So you have both the hardware infrastructure side as well as the commodity side of things. And that's basically, I guess, what the explanation would be.
Andre, let's talk about ICOs, because you're starting to see startup companies use what's called token sales and ICOs for funding. First of all, what are they? And why do you think they're turning to these types of alternative ways to access the capital markets?
Yeah, well, interesting. So I think that this is a new alternative class of investment. It's not going to go away. It's picking up steam more and more for obvious reasons. When you look at the VC world, right, if a VC or an investor invests in a small company, they're putting money in a company and they're waiting for that company to do a Series A, B, C, D, eventually hoping that there's some exit, either going public or being bought out by a larger company. But usually their money is stuck, on average 10 to 12 years without seeing any liquidity. So this isn't only good for the company that's raising money when you're talking about ICOs, but there's other dynamics. For instance, there is something that called the utility token, and the utility token allows you access into an already built system. So there are startups that are using ICOs to raise money to build product, and there are other startups that are selling utility tokens for existing products. A great example is my own company. You can go to blockchainofthings.com and you'll see that we will be launching a token sale. It's a utility token that allows access to a working product. We're a company with not only working product, but customers in the United States. So we're not raising money to fund the building of the product, but rather selling a product or access, software license access to our product itself. So there are similarities in some ways, but it depends on the context of how it's being used. And I think we're going to see a lot of this with ICOs and token sales and how tokens are used, whether they're mapped to stocks and bonds or different commodities, or whether they're being used to leverage crowdfunding, or whether they're being used to leverage systems as a license in itself for access.
All right, and Irv, let's tackle this from the registered investment advisor point of view. What are some best practices when dealing with clients in terms of Bitcoin and cryptocurrency? Is there sensitivity around the conversation? It sounds like it's in a bubble. When's it inappropriate? How do you handle all those issues?
It's a difficult conversation, because as a fiduciary, there's just a lot that you can't do. If it's not transparent to you, if it doesn't make sense to you from a prudent man sense of things, which is how we're regulated in a fiduciary sense, it's something that we may not be able to recommend to a client. But again, I think there's different avenues. I think there's different angles that can approach and even participate in both crypto and blockchain. Relative to it being a bubble, just like any bubble, you don't know it was a bubble till after it burst. So I will tell you that I'm already seeing things, and Andre says this as well, that when you have an emerging asset class or even a trend, whether it be the dot-com era or whatever, and it's in its infancy, there's opportunity, but there's always risk, and there's always the opportunity that there's a cottage industry that's growing up to take advantage of some people. Right. So you have to take extreme care in really looking at this, having some level of transparency, talking to people like Andre or people that I know that are in the IT industry and things like that, and getting a better sense of it to really approach it. But again, as a RIA, it's a difficult space to really recommend that people participate in it unless it's through possibly companies that may either through cyber shopping or whatever may participate as it stands today.
All right, and Andre, I want to wrap up with you. The allure of cryptocurrency is the fact it's decentralized, deregulated, but as you start to hear of more products, potentially ETFs, they haven't been approved yet, as you start to hear them on listed exchanges, come on so you can trade the futures contracts around it. They are going to have to be regulated at some point, whether it's the derivative of the crypto or not. Do you think that's going to change the allure for investors and traders that are already long Bitcoin?
No, I think that going forward, we're going to see that a lot of the present regulations that exist and the laws that exist will encompass what a lot of companies are doing presently with cryptocurrencies, right? Be it an ICO or a public offering. We have a lot of frameworks in place. Now, it does blur the line a little bit because this now is a new class of you can call it equities, but you can also call it a new class of technology that exists. And where these lines are blurred is where the confusion lies, right? Is this something that needs to be regulated or it doesn't? And I think it's always going to come down to context, how it's actually being used. We've had robust markets for quite some time. You can see the CME's announcement of a futures market on Bitcoin. I don't think they have to do too much different when it comes to cryptocurrency. Maybe the management of the cryptocurrency on the back end a little bit, but for the most part, those markets are regulated. There's some confusion and there's more regulation going to come down the pipe, but for the most part, I think a lot of the regulations that exist today will be sort of retrofitted to this.
Well, thank you very much for joining us at MarketSite, as always. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.